Hello everyone, today is Friday, April 8th, and this is your USA Gold Weekly Review and Outlook. It was an up and down week for gold, but at the end of the week it ended up being up. Basically gained about $20 on the week, kind of bouncing around between the low end range of the support, and now trading around 1240 and up about 20 bucks on the week. Do want to jump in and talk about that, talk about the range that we've been trading in, and Pete, why is 1215 significant?
Well, it's about the 50-day moving average, which is important. It also protects the psychologically significant 1200 level. Market bounced off it pretty readily, which I think is really encouraging.
Yeah, I think it was actually interesting, especially given the last few years of context. Repeatedly gold has shown rallies, bounces, whatever you want to call them, over the last few years. But it seems like every single time that happened, we would then come back to support and ultimately break below it, and then everybody would come out with all the news about we're in a bear market again, and actually gold would, in most of those cases, fall. So this is like the first time that I've really noticed that after a big extended rally, we came back to an important support level, and then instead of breaking below that and bringing in all the bearish talk, we actually have stayed above it.
Yeah, not even a lot of talk about, oh, this is it, we're going to break through. I mean, it bounced pretty readily, and there seemed to be really strong support at that level. One of the important indicators that Paul Tudor Jones looks at is range expansion. And range expansion, basically since the beginning of the year, has been to the upside. And we're holding key levels. So that's all good, I think.
Well, yeah, and then the Fed is kind of, we talked about this in last week's video, and we were, laughing that here you had Janet Yellen come out and super dovish, and then, all the governors come out and they're hawkish to kind of balance off against that dovishness. And then the minutes come out this week, and of course they were dovish, which is, entirely expected. And that, lent support to gold too. It kind of came right at that moment when gold was challenging the downside, kind of really following through on that hawkish talk. And then here we've come up in the range again. And so, moving higher in the range, and we'll see, obviously, to get above about 1265 definitively and bring in that 1280 kind of peak high that we saw. That's going to kind of be the next targets, and just in terms of price action itself. But I do want to jump in about the Fed here and talk a little bit about this and some GDP stuff that you and I were talking about before we shot this video. So jump in there.
Well, interesting that you say in terms of the Fed speak trying to kind of even itself out. Janet Yellen spoke late yesterday, and she was actually quite optimistic about the economy, and very explicitly said, "I don't think December was a mistake." Well. We're going to put the GDP Now chart up, and you can see that the first quarter GDP expectations have eroded pretty substantially since mid-February. The Atlanta Fed, who does this model, was expecting GDP for the first quarter to be above 2.5% back in February. The latest revision, based on today's wholesale sales number, 0.1% is their expectation right now. So given the erosion of those GDP expectations, I think it becomes abundantly clear that December was in fact a mistake. Again,
and that's going to be very telling and influential as we move forward. You were actually educating me in this. I didn't know this, but so they announced the GDP number, and then they make revisions moving forward. Correct. And that first announcement's when?
April 28th would be Q1 advance.
Okay, and so that's when we're gonna first get that idea. And if it comes in there right around no growth, I mean, and
almost everybody right now is below 1%.
Yeah, and so I mean,
even though if you look at the chart, you'll see that the blue chip consensus is still right around 2%, but Goldman and B of A and everybody is below 1% expectations right now. B of A is probably going to lower theirs. I think they're at like 0.3 right now. I think they might lower theirs to 0 or maybe even negative.
Yeah, well, and negative GDP 2 quarters in a row equals recession, and there's no way in the world the Federal Reserve is going to raise rates into a recession. It would be literal insanity by their mandate.
Right.
So, this is a big thing for us to be watching, especially in the context, and we've covered this in so many videos, but just to repeat, that so much of the overhang in gold over the last 18 months has been from the taper tantrum to the we're going to raise rates, and it's been so dictated by this perception of this tightening cycle in Fed policy. And so to see GDP numbers that fly in the face of such policy is really important for the gold market.
Right, and the other thing we watch is Fed fund futures pretty quick because it gives the market indication of Fed policy expectations. Recently we were looking out to about September to even see a 50-50 chance of a rate hike. After the minutes came out yesterday, we have to look all the way out to December to see even a 50-50 chance of a rate hike.
Yeah.
So April's off the table. June is now below 20% chances, and September is like below 35% chance or something like that. So
Right.
again, the odds of a rate hike this year are diminishing rapidly, and GDP could seal the deal for sure that it's just not going to happen.
And this is where you start to see, so many of the people like us that have been saying things like they were never going to raise interest rates again. They might even go to QE before they talk about raising rates again. And so continue to monitor that and continue to see what happens. But very big part of what happens for the price action in gold. Certainly, beside all the fundamentals that we always talk about, but that's the topic of today's video. So to kind of finish things up today, we're going to have a little bit of fun. We had a special offer. We run special offers around our company here, every few weeks to a month. A few weeks back, we ran one on a Switzerland 20 franc. Everybody who bought in that special 10 coins or more received a raffle ticket. And so that raffle is to win a Swiss Confederatio. So here, Pete and I are going to run this raffle. So Pete, without further ado, all the tickets are in here. Do not look.
I will not.
Pull it out and tell me what you come up with here. Yeah, you're really not looking.
I'm really not looking. I couldn't find the box. Got one.
Okay.
And the raffle number is 25958B.
All right, so that is RT from Ohio. Congratulations. We'll contact you directly and let you know. But you are the winner of our Swiss Confederatio. Congratulations. So, as we move on from that, we will now close with our golden gong, which I might actually say a few words after I read this, because we do really think that this is very in alignment with what we feel, and sometimes feelings do matter. But in the with moving forward here, this is a quote from Lord Jacob Rothschild. It's actually quoted in my father's newsletter, which we're releasing to our mailing list today. So if you're on our mailing list, you'll be receiving a copy of that. If you're not, we'll throw up a sign up here so that you can both receive the kind of special offers that we referenced here, as well as newsletters and so forth. So without further ado, in my half-yearly statement, I sounded a note of caution, ending up by writing that the climate is one where the wind may well not be behind us. Indeed, we became increasingly concerned about global equity markets during the last quarter of 2015, reducing our exposure to equities as the economic outlook darkened and many companies reported disappointing earnings. Meanwhile, central banks' policymakers became more pessimistic in their economic forecasts, for despite unprecedented monetary stimulus, growth remained anemic. Not surprisingly, market conditions have deteriorated further, so much so that the wind is certainly not behind us. Indeed, we may well be in the eye of a storm. And I do feel like it feels that way. We had this pretty big advance in the gold market, crazy volatility in oil at the beginning of the year. Stock markets got roiled. It was pretty dynamic what was occurring, but then all of a sudden, things have kind of calmed down a little bit, and it does have that feeling.
Yep.
So we felt it a very apt quote for today's video. So Lord Rothschild, golden gong. Thank you very much for watching. I'm Jonathan Casares.
I'm Peter Grant.
See you next week.